Hello guys, in today's video I'll be breaking down a counter trend setup using top-down analysis, so you know that with True SMC you're not only limited with the pro trend trades. And so without further ado, then let's dive in. Okay, so this is GBP USD on the daily chart, and we can clearly see price has taken out the major inducement, continued lower, taking further sell side liquidity, but eventually, as you can clearly see, price reversed back all the way towards breaking past that swing point high prior to this retracement. So this means then we have just created what we call a break of structure, and in this case a bullish break of structure. Okay, so if I am to mark the swing points, of course we can clearly see this here is the high that price broke, creating that break of structure to the upside. And of course our swing point low is none other than this one here. Okay, so let me get rid of that and this one. And we can clearly see right now price is retracing back to our dealing range, that is after that break of structure. So this retracement can be due to a mitigation of maybe a reaction zone to the left here, or maybe price has taken out some liquidity on the left, that is buy side liquidity, and price is now retracing. So this could be a possible start of our complex pullback. But right now this reaction is yet meaningful, as price can continue higher, creating a higher high. But if now the opposite happens and price instead creates a lower high which continues lower, creating a lower low, then in that case our internal structure would have just started. Okay, so let's mark our inducement. We can clearly see that this one here is our minor inducement, minor because it occurred before the break of structure. And if I am to mark the POIs right here, we can clearly see that we have our extreme. Okay, so this here mitigated. By the way, all the order flows are mitigated. That's the reason as to why I have jumped directly to the order blocks. So that is mitigated, and we can clearly see that this one here is not associated with a fair value gap, so it's of no use to us. And the one associated with a fair value gap is none other than this one, and this one here makes us, of course, our extreme bullish order block. This one here is mitigated, so it's of no use to us. Okay, so let me zoom so that you guys can clearly see what I was talking about here. You can clearly see exactly right here that this order block got mitigated here. And for this order block, even though it took the previous candle low, we can clearly see that this order block is not associated with any imbalance, and we know that the imbalance or the fair value gap is an important criteria in identifying order blocks. And in that case, then we have no doubt to say that this one here will be our extreme order block, as it is the candle that has met all the criteria to be called a valid order block, and it is of course on the extreme of our trading range. So you can clearly see took out the previous candle low and associated with a fair value gap exactly right there. Even though the fair value gap is mitigated, we said that as long as there is some imbalance left, then our order block is of course valid. Okay, so now we have our extreme order block. We have also marked our minor inducement, and of course right now we just need to see what price will do here. Okay, so let me get rid of this one and of course continue running price. So we can clearly see exactly right there, instead of actually price continuing higher. Okay, so let me now do this so that you guys can clearly see the candles. And so we can clearly see exactly right here price did what we wanted. Exactly right there, price made a break past that lower low instead of continuing higher. Okay, so this is the pattern I was talking about. Exactly right there, that price did that, created that lower high and continued lower, creating that lower low. So this is of course the start of what we call an internal structure. Okay, so let me get rid of this one. We can clearly see where price is currently. And exactly right here, we can clearly see that price has taken out that low and head higher, all the way breaking past that high. And also we can clearly see that this here is the opposing leg or the opposing move before that buying displacement that heads all the way breaking past that external high. So this means that this zone, even though it's before the minor inducement, in this case this zone has some strength, and this means then we have no doubt to say that this one here is of course a reaction zone. A reaction zone because price has yet taken out the inducement, and of course we need the inducement before that ultimate move that heads all the way breaking the structure. Okay, so right now price has achieved to the reaction zone, and if I am to mark, of course, what we call the smart money trap is none other than this one here, and so this makes what we call an inducement trap or an SMT as it is before the inducement. Alright, so now let me continue running price so that I see what price does here. And exactly right there, we can clearly see the reaction from that area. We can clearly see price has yet made it to the SMT. Price has yet taken out the inducement. And this means that if I can actually know where this reaction ends, then in that case, I can participate for that selling move to the next reaction zone, of which it is this smart money trap. Of course, price is anticipated to react from here to lure the early buyers before it continues lower all the way towards the inducement takeout. So these are just reaction zones, and price will react, and price will only give a reaction, but then later will fail that reaction. So for the counter trend trading, you just need to know where that reaction will end so that now you can participate that selling move towards the next reaction zone. Of course, all ultimately towards the inducement takeout. And of course, you have guessed it right, the reactions are anticipated to end on these internal structures POIs. Of course, once price it gets that reversal POI in our internal structure, we'll be looking forward to sell all the way to the next reaction zone and ultimately towards the inducement. So right now we are in the daily time frame, and we can clearly see that this one here was the lower high. This here is the lower high that price created before it continued. So I'll just be using that color before it continued lower, creating that lower low exactly right there, so that now it can start that internal structure. Okay, so this is the daily chart, and of course the lower time frame of the daily chart is of course the 1 hour time frame. And so now I'll be shifting to the 1 hour time frame so that I can get to see the bigger picture of our internal structure. Okay, and we can clearly see now we have got the bigger picture exactly right here. So I'll get rid of this one, and we can clearly see this here is a swing point low, this is a swing point high, and of course right here we can clearly see that price has taken out the inducement exactly right there. So we have the inducement, and after that price reversed back, making a break of structure to the downside exactly right here. So this makes the break of structure, and we can clearly see, of course, where the inducement is. It's none other than this one here. So that's our inducement, of course, on the current trading range. And if I am to mark the POIs, of course, we can clearly see that this one here will be the extreme order flow. Alright, so we have got our extreme order flow exactly right there, and we have got the decisional order flow exactly right here. Okay, so that's the decision order flow, and this here is of course the extreme order flow. This one is what we call the engineering liquidity. So we have got our engineering liquidity exactly right there, and any other POIs apart from these, they're just weak zones, inducement traps or smart money traps. Like this one here is what we call, so like this one here, it will just be a weak zone. As you can clearly see exactly right there, price is giving some reaction, but I'm anticipating that reaction to fail. Okay, let's mark our order blocks. You can clearly see that this one here is the extreme order block. Of course, it will be available inside our extreme order flow. So we have got the extreme bearish order block there. And of course, if I am to mark the decision order block, we have got it exactly right here. So that is, of course, our decisional bearish order block. Alright, so now let me run price so that now you can see where price will be reversing from. And we can clearly see that bearish reaction from that weak zone. That is not to participate, as it is a weak zone, not reliable to push price all the way towards the external liquidity. Okay, so right here we'll continue running price, and we can clearly see exactly right here that price failed this weak OB. It also failed this decisional, and price has now taken out our engineering liquidity. If I am to do this, you can clearly see that this here is our, of course, our order flow, and this one here is our order block exactly right there. So I'll continue running price here to see if this is a sweep or something. That wasn't a sweep, so price is expected to head higher. Price has now mitigated. Of course, you can clearly see there our extreme order flow. Price has yet mitigated the extreme order block, and we can clearly see all of that. So if this candle closes with good momentum, then of course I can participate for the sell. And we can clearly see exactly right there that candle closed as I anticipated. So of course that is the pattern. My stop loss, of course, above this extreme order block or above that external high. And of course my TP1 is none other than this here. I mean this external low here. So this here is my TP1, and this already gives me a 3.3. So that's my TP1. My TP2, as you have guessed right, it will be on that SMT, of course, this one here. So this one here will be my TP2, as this one here is the second reaction zone where we anticipate price to be reacting from. So exactly right here is where we are anticipating price to be reacting from. And of course, eventually my TP3 will be none other than the inducement, of which it is the liquidity price is heading towards. So exactly right there, we have got my TP1, as I have said, on this external low, my TP2 here on this reaction zone, of which it is the smart money trap. So I'm anticipating something like this, price heading lower, of course mitigating the SMT, giving a reaction, and after that heading all the way towards the inducement. That is the higher time frame inducement, the daily inducement. And of course this here is my TP3. Okay, so now let's start with the TP1 exactly right there. And if I am to continue running price here, so exactly right there, if I am to continue running price, we can clearly see that okay, so price is doing that. Let me make it fast. Price is heading onto our favor, and okay, that's good. Let me make it even faster. Exactly right there, we can clearly see price failed the order flow, headed towards the extreme order block, but luckily, of course, I set my stop loss above the order block. So in this case, I'm still in the position, and we can clearly see price is of course heading onto our favor. Of course, as you can clearly see there, I continue running price, we can clearly see that price is doing all of this. Okay, so and okay, so price is taking a while there, but I'm anticipating eventually price will make it to, yeah, exactly right there. You can clearly see exactly here price made it to TP1. So in this case my TP1 is hit, and yeah, price has made a break of structure, of course, on the internal structure. So yeah, that is what we call a break of structure. So my TP2 is none other than this area. And by the way, after the break of structure, I can still take another entry. So let's see. Right now, our high is none other than this one here. So let me do this. Yeah. So if I am to mark the inducement, of course, in this case, the inducement is this high. Why this high? Because this one here is not a valid pullback. So let me continue running price here. Okay, so you can clearly see price did that, and eventually price created another valid pullback. So this means now we have just created a major inducement. So that is of course where our major inducement will be. Yeah, exactly right there. And if now price comes all the way taking the major inducement, then I'll be looking forward to sell, of course, if price mitigates a reversal zone, a valid reversal zone. Okay, so let me continue running price. And we can clearly see price created another. All right, so exactly right here, we can clearly see that price created another valid pullback. So this means I will continue shifting all the way towards the, yeah, so it is this one here. So this is, of course, the current pullback or the recently formed valid pullback, and you can clearly see price has mitigated our reaction zone, or in that case our smart money trap. So we are not expecting price to head higher from here all the way, making a change of character. Of course, from that high we're expecting a reaction, and that reaction of course should end somewhere on a reversal zone, and then price continue towards the inducement takeout. Okay, so you can clearly see exactly right here, price has made it to the TP2, of course, of which this here is my TP2, and that is 4.36, as you can clearly see exactly right there. So now let me see what price will do here. Okay, so let me continue running price. Okay, so price is heading higher. Price has mitigated the SMT here, gave the reaction, as you can clearly see exactly right there. Price gave the reaction, but we know the SMT is just a reaction zone. It is just there to lure the early sellers in this case. And of course, after the sellers are taken out, you can clearly see price headed to the inducement. The inducement is now taken out, and now is the time to mark the POIs. So of course, I'll start with the order flow, and I can clearly see this order flow is mitigated. So in this case, if it's mitigated, it's of no use to us. So that's mitigated. Of course, the one that follows is this one. And in this case, it's yet mitigated. We can clearly see that. And any other order flow apart from this one, we can clearly see they are all mitigated. Yeah. So in that case, I have only one valid order flow. So this here is, of course, a valid order flow. And this here is not a mitigation, as it is not a valid pullback. So if I am to mark the POIs, so if I am to mark the order blocks, we can clearly see that if I start from the extreme, this one here will be the extreme order block. So I'm not sure if you can clearly see the candle that I'm marking. It's actually, okay, so it's actually this candle here. We can clearly see that after price has taken out the previous bullish candle high, this here was the candle that did that, and it did that with a body, but it is not associated with a fair value gap. And I said that we need to shift to the candle associated with a fair value gap. So that's the reason as to why I had to shift to this candle, as this is the candle that is associated with a fair value gap. Its fair value gap is mitigated, but even though it's mitigated, we can clearly see it left some imbalance, and so that order block still counts to be valid. So exactly right there we have our Alright, so in this case it will be an origin order block, as it is located above the extreme order flow. Okay, so exactly right there we have it, the origin order block. If I am to mark the decision order block, of course, we can clearly see that this here is the order block before that break of structure. So in that case, we have our decisional, and it is inside our extreme order flow. By the way, you can clearly see that, of course, decisional bearish order block, and you can clearly see it's inside our, yeah, so it's inside our extreme order flow. You can clearly see that this one here is, of course, our internal low. Yeah, exactly right there. This one is our decisional, and of course our extreme, it will be none other than, of course, it should be located at the farthest end of our extreme order flow. So in that case, starting from this high, we can clearly see this candle is yet associated with a fair value gap. So I'll be continuing to shift until this candle, yeah, so this is the candle associated with a fair value gap. So exactly right here, that is, of course, our extreme order block. Okay, so now we have it, our extreme bearish order block, and of course our extreme, our decisional order block. So all our POIs are marked now, and I can continue running price so that I get to see where price is reversing from. Okay, so this here is of course a weak POI or a weak order block. In that case, it's not strong enough to push price to, yeah, you can clearly see it meets the criteria to be called a valid order block, but in this case it's a weak order block as it is after the break of structure. So any POI after the break of structure, we all know that it is weak, and of course weak POIs are not reliable, and we usually use them of course as reaction zone. They will only cause a reaction. Of course sometimes price may react from the weak order block all the way towards the external liquidity, but it's not a reliable zone and it cannot be used all the time. The reliable zone, as you all know, it's either our extreme order flow, the origin order block, or our order blocks here. So let's see what price does here. Of course, our engineering liquidity, it will be none other than this one here. So we have it there, our engineering liquidity, exactly right there. Okay, so let me continue running price so that I get to see where price is reversing from. Okay, so I'm not interested of any internal structure that is happening there until price mitigates a reversal zone. Alright, so price has mitigated a weak order block, or should I call it an SMT, as it is before the engineering liquidity, and you can clearly see that reaction to the downside. A weak order block is not reliable, and I cannot use it as a reversal zone, or I cannot depend on it entirely to push price all the way towards the external liquidity. So in that case, I will pass on this one, not until price reverses back, if it will, towards our valid zones. Okay, so in this case, we can clearly see the reaction, and eventually price made a break of structure to the downside. Okay, so exactly right there, you can clearly see price made that break of structure to the downside. And yeah, so this here would have been a missed trade, but of course our swing point high, yeah, in the counter trend, of course in the internal structure. And we can clearly see, if I continue running price eventually made it towards the higher time frame inducement, of which is the TP3. So this here, of course, it was my TP3, and of course you can clearly see price has made it there. So exactly right there. It took long. Of course, this is a swing trade, as this is the 1 hour, but you can clearly see that is a 1:6, and of course a nice counter trend setup. Okay guys, let me not make the video long. You can clearly see exactly right there, that is the counter trend trading before the inducement takeout. And as you can clearly see, with True SMC, you can also take counter trend setups and not entirely just pro trend trading. Okay guys, I believe you've learned something new, so do me a favor, drop a like, and of course I will see you in the next video.